All right, welcome back to another episode where we're going to review what happened in the rates last week. This is the box that we're talking about dealing with last week. It starts up here on Monday, goes all the way through Friday, and we are going to break it down. All right, so let's go ahead and take off the box so that we can get a clearer picture here. All right. So what we're dealing with is market moving news that it really came around Thursday, and all of this happened throughout the week, and we really moved down again. To give you a bigger perspective, a 2 year, this was last year where we thought, oh my gosh, this is the worst low ever. And then now we're all the way down here. So continuing to move in the wrong direction, and based upon the signals and what we have here, and there's no support down here other than some future Fibonacci levels, you just don't know where it's going. So at this point, nobody knows what's going to happen. And if anybody tells you that they do, they're wrong. So let's take a look at what happened on Monday. And you see that it actually had a big leg down here, but we were actually recovering, and then we lost a lot. But come Monday, hopefully we were hoping to see kind of a rebound, but we did not. We actually were going down, probably seeing a test down in this direction, and really nothing was happening much on Monday to move the market other than the market anticipating what the Fed was going to be talking about at the end of the week. On Tuesday, which is this big leg down here, really what happened was retail sales rose 0.7%, which was way stronger than the estimated of 0.3%. And core retail sales, if you separate gas and autos and everything else, it rose by 0.6%, which was also well above the 0.1%. And really what that's saying is that people are spending money still. And it's not really, like all this rate increase and everything else that the Fed is doing, people are still spending money as if they have it, and as if it doesn't really matter what's happening in the economy. They're just spending their money, and it's greater than anticipated, which really means that it's not having as big of an impact, all these rate increases, as the Fed wants. Now it will at some point, because let's face it, Americans are slow on the take, and we're probably going to have a pretty big like a rubber band bouncing back. It's going to go the other way really fast, more than faster than they expect. But in the meantime, there's not a whole lot more that they can do than continue to put downward pressure. Now, this was testing this low here, right? So this is really the floor. And if it was to break through this, we're in uncharted territory, and you really don't know where it's going to go. So think of this as like a glass floor. And then the very next day, the market actually opened below it. And so it just bloop, went right below the floor, and you're hoping that it closes above it. Unfortunately, it did not. So what happened on Wednesday? On Wednesday, basically, there's not a whole lot of market moving news, which is why it didn't move very far, but they're still pessimistic thinking about what's going to happen Thursday. Now, there were some interesting things talking about signs of impending layoffs. For instance, the Worker Adjustment and Retraining Notification Act, which is WARN, says that it protects workers and their families and communities, and it requires employers with 100 more employees to provide at least 60 calendar days in advance before they do layoffs. Well, there's a lot more WARN notices going out there, and the thought is that in October that unemployment claims are going to rise quite a bit. We'll have to see what the actual news says, but that's kind of on the horizon and not really impacting us. We're still waiting for Jerome Powell to talk on Thursday. What is he going to say? Is he going to be hawkish, or is he going to be, dovish? What is he thinking about what's happening out in the economy? So when we come to Thursday, he really didn't have a whole lot to say. It wasn't market moving. He was relatively hawkish, meaning that he doesn't think that enough has been moved in the market. He acknowledges that the rates and what's going on now has slowed the economy, and that it's doing what they want it to do, and inflation is definitely coming down. But he's not sure if it's enough, and he's being overly cautious and still playing the card that they may still continue to increase rates. And part of his fear is long term. Hey, did what we do damper the economy enough to keep inflation low long enough, right? So that's kind of his position. So it's kind of on both sides of the mat, and that's why it kind of left it without a really big market moving. It's basically what people already knew. Now, other Fed members are saying that they think it's enough, and they need to wait and see what happens in the economy and take it, 1 month at a time and see how it develops. That's basically where we're at overall. So you have more and more members of the Fed saying, hey, we need to kind of pause. We need to see what's happening. and you see Powell going, well, hey, I just don't think so. I think that there's definitely some more rate hikes. But what this also did is it put into future projections, when are they going to lower rates? Well, now some are saying like mid 2024, late 2024 before they lower interest rates, meaning they're just going to let it sit there at the higher to let it kind of cook the economy. The problem with the Fed is that they're always behind, right? They're always late to the party. So by the time that they actually reduce rates, the economy is going to be probably into the recession. So there's a lot of data out there that is just kind of conflicting, and that's what's creating this uncertainty in the market. So that when we come back up to Friday, really what we're looking at is, we don't know what's going to happen. So they're just kind of hanging out, right? Trying to break above this the ceiling again. This level of resistance, not really moving that far, but there's nothing to say that it can't continue to go down. To break back up again, won't necessarily mean a whole lot either, because you have all these points of resistance, and this is a major trend line that's coming down. So even if we see some positivity, it doesn't mean that the days are over for this downward trend. So it's going to have to really buck. I mean, you can see how sharp this is. It's going to have to buck here. And then more than likely, it's going to go into like a trading range before it does anything else, as we see what happens in the economy. So I think really what we need to take out of all of this, good, bad, or indifferent, is that the higher interest rates are going to be here for a little bit longer, unless there's some really catastrophic market moving event. And of course, everybody's looking at world events and seeing what's going to happen in the Middle East. That can have a drastic impact on rates. There's so many factors that can go into this. But as we continue to watch what is happening in the market, we need to kind of buckle up and say, this is our reality. Rates are somewhere in the 7 to 8% range in most cases. So, that's kind of where we're at. And buyers need to understand this. It's going to change what minimum monthly payments are. And this is also going to have an impact long term on some of the larger markets, because we're still low in inventory and housing prices are still going up. And this is what people need to know. When rates do go down, for all those scaredy cats that are sitting out there and saying, well, I don't want a 7 or 8% interest rate, well, they are going to be just hammered by housing prices if they wait, because so many people are waiting. So many people are like, well, I don't want to spend that, interest rate or that. And then when the rates do drop, it's going to be a feeding frenzy. That's going to drive those housing prices up, and you're going to have people bidding over, and housing prices are going to increase. So that higher interest rate that you bought now, you can refinance to a lower rate at a lower price point to a lower payment than you would if you wait to get into the market until they drop and you're buying at a much higher sales price. Food for thought. All right, that was the weekly recap of mortgage-backed securities. I hope you have a great day, and until next time.